Okay, we're here with Steve Sexauer, who's a longtime participant in Camp Kotok. I know you like it and have really enjoyed the fishing. The first question I have for you, knowing that you're from California, and that is, what time is it? Is it lunchtime or breakfast?
Well, true confession here, we were just having a conversation trying to figure out which day it was. We were counting on our fingers to get the right date.
Exactly. Tell us a little bit about what you do, what your responsibilities are at this point.
So Bob, I'm the Chief Investment Officer for the San Diego County Pension Fund. So it's between $16 and $17 billion, depending on the day. And so I'm responsible for the portfolio investments.
How has the pandemic impacted what you have to do and think about as far as the portfolio is concerned? Maybe it doesn't, I don't know, I'm just curious.
Well, the pandemic had a big impact. So when we went and the entire country got locked down,
yes,
there was about 10 days, I call it 10 days in March of 20, where there was no liquidity. And so we at the county have $70 million payroll every month to retirees.
Okay.
You can make a lot of mistakes. You can never, ever miss payroll. So part of the challenge was, if the market stayed locked up, making sure you had enough liquidity. So for example, we called our cash manager and said,
right,
because we want to put some money in the market when spreads widened out. They said, no, think again. There's zero bids. But on March 23rd, Fed showed up.
Okay.
Carpet bombed the economy with programs. So what's happened, to your question, there's liquidity everywhere. Asset prices have melted up.
Yeah.
So our question is, we keep selling.
Okay.
And sitting on
essentially taking capital gains is the reason?
We're not taxable. So we're basically saying if we were 55% equities, and now we're 62%, go back to 55, 53.
Okay.
But we've been building a big liquidity buffer.
Okay.
Because I think the lesson we learned, whether it's 2008, March of 2020, February 2018, is liquidity just evaporates. And so if you have it, and we make sure we do, you can then go buy assets at
that's sort
discounts.
Of a Yogi Berra kind of statement. Liquidity is what you have when you don't need it, but when you need it, you don't have it.
Correct. My old boss from years ago in the asset management business, Barton Biggs, had this fantastic saying. Maybe he took it from somebody, but I just remember it was Barton's. Liquidity's a coward. It runs at the first sign of trouble.
Yeah. Well, to that point, what about tapering? Are you concerned that there'll be another taper tantrum if the Fed starts to move?
Yes.
Okay. What do you do in that case?
I have plenty of liquidity.
Okay.
And part of it is, if you talk to people in the markets, they're like Chuck Prince on steroids.
Okay.
If the music's playing, you have to dance.
Okay.
And the problem is, the formula's been right, is the Fed and Congress now has flowed cash into households, state and local governments, where the Fed, assets go up, and they go up a lot. And so if you don't own them, you have a problem.
Now, you mentioned you were rebalancing away from equities back towards fixed income, but those are bad yields at this point.
Well, I don't know what your definition of bad is. I just call them very small.
Okay.
But here's what happens, though. High yield market, risky market, the yield you get for buying a high yield bond is less than 5%.
Right.
High quality real estate, industrial real estate in Austin, unlevered, like 3.2% yields.
Okay.
So that we're staying away from.
Okay.
That movie will never end well. So you end up with either equity or reasonable real estate if you bought it good. Okay. And
so it's a risk issue. It's a yield problem and a term premium problem, and you're not being compensated on the term premium. So that means shorter maturities, probably, other things equal, and just ride it out.
We'll write it out in equities.
Okay.
Because I can buy Citicorp at a 3% yield. I can buy the 10-year Treasury at least this morning it was 137.
Right.
So you just, I think the most important thing is liquidity.
Okay.
You have to be able to withstand a week, a month, where things don't work.
Yeah. Just one last question. Are you seeing more people retiring now because of the pandemic? Is there any sort of pattern there that one can sort of see at this juncture that might come back to have implications for what you're doing?
As a pension fund, we see that, and the answer is yes.
Ah, okay.
Yes.
Interesting. Well, thank you very much. It's very
good to be here with you.
Yeah, appreciate it very much. It's always learn something, that's for sure. Thank you.